Hey, what's going on, guys? Thanks for tuning in to today's ACM Insider episode featuring our very own Atlantic Coast Mortgage Charleston loan officer, Gabby Heymans. Gabby, how's it going today?
Great. How's it going with you?
It's going great here in Arlington. So, Gabby, you've been in the mortgage business for around 5 years, and in many ways, you're what I would call a modern day, or as we say at Atlantic Coast Mortgage, next generation lender. You use social media to engage and educate your audience. You connect with many of your buyers on social media, and that's really just calling out a couple of ways that you've been able to grow and scale your business throughout the Charleston market. So let's kind of kick this off with the first question of, what do you feel like it means to be a modern day loan officer, or as we would say, a next generation lender? How do you differentiate that between a more traditional, outdated, old way of doing things, and why should that be important to clients?
It's a great question. I definitely think being a modern day loan officer just takes on a different role than what it used to be or used to mean to be a loan officer. Definitely, for sure, one of the biggest advantages and changes in the mortgage industry is the technology that we use. And Atlantic Coast Mortgage provides so many amazing technology outlets for us to use to communicate with clients, especially when the COVID epidemic hit and we lost a lot of in-face meetings with clients, which is typically the old school way of doing it. We found ways around, that challenge, and we already had those systems in place, which made it awesome. So we can look at loan options together. We can do virtual meetings. We can do all of our applications online and really just make the process super streamlined for the client rather than them feeling like they have to come in and meet. And, we have all of these amazing ways that they can feel a part of the process without that aspect of it, which is definitely more old school. Another really important thing that I think is important with being a next generation loan officer is the ability to communicate with your client and have that ultimate transparency with that client. Because unfortunately, an old school lending way would be to get the application, put the information in, get the loan, and that's it. There's no walking you through the process. There's no explaining what's mortgage insurance, what's an escrow account, all of these important things that are in the mortgage process. And if you're a first-time home buyer, or if you haven't bought a home in a really long time, you are completely uneducated about those things. So it's our job as loan officers, especially being a modern loan officer, to educate our clients, communicate with our clients, and lead them through the process so they don't finish it feeling traumatized. Like they never want to do it again, So those are, I think, the most important things to me is some great technology, the ability to communicate, to be transparent, and just educate your clients through the whole process.
Yeah, one of the things that you do a fantastic job at is what I call edutainment, which you do a lot through your social media, where it's you're educating people about the loan process or what's going on, in the market that you serve. But you always do it in a fun and interesting way, which isn't to say that everybody has to do it that way. But I do think that the way that you talked about, a lot of people think that technology removes the personal touch to the process.
Mm-hmm.
When you have fully started using technology to enhance that engagement piece, as well as the educational piece of it, which I think is such a great thing. And to me is one of the biggest differentiators between sort of an old way of doing things and a newer way of how you're using technology and the tools at your disposal, like social media, to create a better experience for people and even draw people into you because they see your personality and really who you are. So let me ask you this. What should borrowers expect from lenders, especially, if you're a first-time home buyer? I know you work with a lot of first-time home buyers. What are some of the things that we should be looking for, that borrowers should be looking for when they are starting to look for a house, even if it's not their first time? A lot of times people can kind of end up working with the wrong person the first go around, get a bad taste in their mouth. So give us a couple of things, whether it's the first-time home buyer or, even someone who's buying a second or third home.
Yeah, absolutely. So the things that you want to look for in a loan officer, I believe that the mortgage process really becomes smooth when you pick a lender. You first have to pick a lender that you trust, because they are leading you through this financial transaction that's possibly the largest financial transaction that you've made in your life up until that point, or in a very long period of time. So you want to trust that, I would say, like, head of your team. You know, they are like your quarterback. They're going to be leading you through the entire process. So you want to trust them. You want to be able to have full communication with them. And one of the red flags that I would say comes up a lot is when I'm hearing clients say, I can't reach out, I can't get in touch with my loan officer, or I don't know who my loan officer is, or they're not calling me back, or they said I would get qualified for this and now they're changing their tune, you know. And there's a lot that happens when there's lack of communication, or lack of setting expectations. So what you'll get with me is definitely, you know, setting the expectation up front as to what the process is going to be like for you, and being very transparent on the specifications that some mortgage processes need or loan terms need. So that's really important, is to have communication and trust with your lender. That should be very high on your list of when you're looking for a lender, is trust, transparency, communication, availability, so that you know you can reach out to your lender when you need them. And definitely, I know people always talk about interest rates. Those are also very important. But at the end of the day, if you have an amazing interest rate but a terrible experience, it puts that bad taste in your mouth again. And hopefully the lender that you choose will be able to tick off all of those boxes, including a great interest rate and loan term, and also, you know, meet all of those other expectations. So that is the most important thing to me, I would think.
Yeah. And you touched on a couple of great points, which was setting expectations, trust, and then someone who's going to be walking with you throughout the entire process, right? Which, you know, most people say, I'm going to walk you throughout the entire process. But I think that is such a big thing, to set those expectations up front, particularly when you hear kind of what you're talking about, whether it's interest rates or other factors that kind of play a role in what their final payment may be, or challenges that other people have faced. They kind of put themselves in that same box. And the reality is there's no two situations or home lending situations that are created equally. Would you agree with that?
Absolutely. Yeah. No loan term, loan file are created equal. I could look through my clients that I have right now, and they are all so vastly different, and nothing is cookie cutter. Nothing is, you know, exactly the same as somebody else. It's always going to have a little bit of difference here or there. So you are absolutely right. You can't take someone else's experience, whether negative or positive, or someone's other loan rates, terms, interest rates, and expect those to be applicable to you as well.
Yeah. I think something else too, that people should take into consideration, kind of going along the lines of education, right? So there's two forms of education. There's being educated by the expert, which is the loan officer, but then there's sort of like your own self-education of doing your due diligence to kind of find out who the person is. You know, one of the things that I love about, like, with you and with all of our ACM loan officers, is all you have to do is Google them. You know, we have dedicated services that are set up to where our customers, no matter what, can leave a review. So you're able to actually go and see, like, all right, what is it going to be like working with Gabby? So they can see you on social media, they can see your webpage, but then you also see other borrowers and clients you've worked with, what their experience has been like going out throughout that entire process. That's why it's one of those things where, obviously, if someone's telling you about themselves, they're going to say all the great things, right? But the thing that I love, like with you and with others on our team, is literally you can say, hey, not in a boastful way, but literally just Google me, and you'll be able to find more information than just me telling you how great I am or what I can give you. You're able to see. What kind of feedback would you give to people as far as, you know, when they are researching and looking for a lender to work with? What are some of those things that they should look for?
I mean, again, just kind of going back to making sure that you have somebody that you can trust. So if you're working with a large bank, you know, that is, you know, a nationwide bank, or if you're working with an online lender, or some of those that are definitely, I feel like that's the main competitors that I see in my market are online vendors. And, you know, big banks like that they bank with, and so when you're looking at that, you always want to automatically assume that they have your best interest at heart, because why wouldn't they, So when you get into the process and you start, unfortunately not being able to reach people, and a lot of online vendors, they kind of get you in with some really good rates and terms, and then their customer service falls off and you're left feeling like you're in a lurch a little bit. So
Yep.
I would definitely say, research those companies, research those banks, and make sure that you're understanding that the experience sometimes may be more negative than positive. And if you are in for that kind of transaction, then, all the best. But, if you want something that's a little bit of an easier process, definitely do your due diligence, definitely do your research, and make sure that whoever you are selecting to lead you through that process is going to leave you with a good taste in your mouth so that you're going to want to do it again, and, not be afraid to go through that process all over again. So definitely research and due diligence is very important.
Yeah. And I would say, kind of piggybacking off of that as well, that's the difference between using technology in a way that helps with that engagement and communication and education process. And then the way which, like you're talking about, a lot of, online, where it's, you see it and it's, it's basically a fully automated process that in many ways removes that personal touch from it. Right. So you can kind of get lured in through some flashy, whether it's, the interest rates or some other aspects of it. But at the end of the day, the actual process of it is not necessarily the smoothest process. And you don't have a dedicated person like a Gabby that you can call on top of the technology piece. So that's the thing that I think that you in particular and our other ACM loan officers really bring to the table is the technology and then the actual personal touch. Would you agree with that?
It's a 50-50 partnership. It's a split completely, because I talk about having great technology, and that is so important, but you also need to have a point person. We have great all in-house underwriters, all in-house assistants, closers, everything that Atlantic Coast provides. That is something that I love talking about, is that personal touch where I can speak directly to these people that are vastly important to the mortgage process, rather than not having any of that at my disposal. So it's so important having that partnership of technology and personal touch, because if you have too much of one or the other, it kind of goes off balance. So it's super important to have both.
So along those same lines of that, this is another interesting topic, which is why is seeing an advertised rate online misleading, or it could be misleading, right? It kind of dovetails into what we were just talking about.
You totally just pinpointed, I think, the number one, most thing that we need to talk about, but the thing that's not talked about enough, and that's the fact that seeing an online interest rate advertised is not always going to be your interest rate. So online vendors and banks, they do advertise those, and they do specify a little bit at the bottom in very tiny writing, is only applicable, blah, blah, blah. But unfortunately, you don't go down that far. So you're seeing this amazing rate that's advertised, and then you immediately assume that that's going to be your interest rate, and that's not simply the case. There are some important pieces of information that you need to disclose to a lender so that they can more accurately quote you an interest rate. And a lot of that has to do with an assumed credit score, an assumed purchase price, how much you're thinking of putting down as a down payment, what kind of house are you looking for? A lot of clients don't know that there might be a different interest rate if you're purchasing a condo versus a single family home or a duplex. So that's also important. And also, what kind of financing are you looking for? Because, you could be a veteran, and that might be a different loan product and interest rate than somebody who's looking for a conventional loan. So just always, take it with a grain of salt and discuss what you viewed with your lender so that they can accurately quote you and then advise you on how you can get accurate competitor rates so that you can shop. That is definitely one of your rights as a consumer, is to shop, but you want to make sure that the information that you're getting while you're shopping is accurate and not misleading.
Yeah, no, that's so good. And that actually leads into this next topic, which is rate shopping, right? That's one of the things, everybody wants the best interest rate. But when it comes to that, maybe you could talk about a couple of other key factors that they should think about, where it's taking into consideration. I mean, if there's a huge difference from one to another, that's obviously going to make a huge impact. But if it's a small difference, kind of what you talked about a second ago, as far as, is this someone that I'm going to be able to trust with my financial transactions, particularly around buying a home forever? Is this someone that can help me or is going to reach back out to me with, refinance opportunities? Maybe you could talk a little bit about that and things that borrowers should think about as they're going into that.
That's so important. Yeah. Anytime that I'm meeting with a client, they obviously will discuss we are shopping, which is definitely expected, especially in our industry today, because there are so many options out there. So the number one thing I always say is let's not lose our communication. If you are seeing a rate out there that is different than what I'm providing to you, let's talk about it and let's figure out, is that really a better deal? Because if it is, I will be 100% honest with you and tell you it is. But if it isn't, sometimes there's a lot of hidden fees that, you're not trained to notice as a client. So there could be things like discount points or additional lender fees, or they could just be not accurately quoting you, especially if they're an out-of-state lender. A lot of times they don't always quote exactly the same if you're local, which is also important. They might not know that you need flood insurance, all of these other things that might be a factor. So definitely make sure that you're keeping open lines of communication with your first lender, and seeing if they can work with you on that. And also just putting high on that priority list availability, because a lot of these other competitors that you're looking at are probably not available like a local lender would be available to you on nights and weekends and when it really is important. And you definitely want that to be a priority as well, because you don't want to be 2 weeks into the mortgage process and you're having a panic attack at 8:00 at night and you can't get a hold of your lender. So that's important, more than people think at the beginning. They just see this interest rate and it could be such a minimal difference. Also, if a lender quoted you yesterday and I'm quoting you today, it could be very different because rates fluctuate all day, every day. And
especially recently.
What was that?
I said, especially recently, the rates, it's been like a roller coaster.
Oh my gosh, all day, so if someone's quoting you at 9 a.m. and I'm quoting you at 5 p.m., it could be very different scenarios. So you want to make sure that you're comparing apples to apples as best as you can. If I, again, the same turn, if I've quoted you something last week and that lender quoted you today, then it could be that my rates are on par with theirs. It's just mine was from a week prior. So make sure that those options are current. Make sure you're comparing apples to apples, and make sure that you are also just being as thorough as you can when it comes to reviewing what those options are. And also keeping in mind that communication and availability they don't seem as important until they're very important.
Yeah. No, that makes total sense. What would you say are maybe, 2 or 3 or however many you think makes the most sense, questions that probably don't get asked enough that borrowers, when they're going through this process, because at the end of the day, we don't know what we don't know. And if this isn't, someone they're not a loan officer, they don't have the same level of experience, knowledge, obviously, that someone like you does. So maybe a couple of questions that as they're going through that process, even if these are the only things to take away from this conversation of like, okay, next time, or as I'm preparing to do this next time to buy a home, I'm going to make sure that I'm going to ask these 2 or 3 questions that I wouldn't have otherwise thought to ask.
Yeah, so number 1 is definitely discount points. So discount points when you're reviewing that, I'm trying to think of the main things that I talk about with all of my buyers and the number 1 questions that they have. So the first one that they typically don't know what it is a discount point or an origination fee. It goes by so many different names that you can't always catch it. But what a discount point is basically you are paying for an interest rate that's not available on the market. So you're paying to lower it, and it's a fee that not all buyers know to be aware of. So that's something that you definitely want to be aware of, because you could be getting charged thousands of dollars with fees from a different lender, and you're just seeing the beautiful low interest rate and you're not seeing the fees associated with it. So definitely discount points and origination, to be aware of that when you're looking, shopping, or just going through the process. Another one is definitely knowing that there's a difference between, people always say, what's the maximum I can borrow? And
Right.
you don't always want to know the maximum you can
Yeah.
borrow, because it's typically something that doesn't match what you want to pay per month.
Right.
So
Exactly.
a best question to ask a lender is, let's go through some options. I am comfortable paying X amount of dollars per month. And then we can work with you and let you know what that purchase price might look like, depending on homeowners insurance, taxes, and HOA fees.
Right.
So you don't always want the top of your price range.
Yeah.
You just something that's going to make you comfortable. And I would say number 3 is definitely, when you're going through the process, to know, just to know like who you're working with in terms of a lender. I mean, I feel like I've stressed this a lot, but it is just so important, because there's such a difference between somebody like that's a local lender leading you through the process, where you can talk about what is an escrow account, what is mortgage insurance, what is a discount point, rather than calling another lender and they're just sending you, a loan worksheet with no explanation, no breakdown, no nothing. And then you're left having to research it on your own and just feeling so much more overwhelmed than what you should feel. So I cannot stress that enough, just to be so aware of who it is that you're working with.
Yep. No, those are 3 great points. And that actually touches on another aspect of this, and something to take into consideration. And we briefly touched on it earlier, but really the importance of working with a local lender versus a non-local lender. So I'm just going to open it up to you with that question of, why is working with a local lender? There's a number of reasons I can think of, but why is working with a local lender? Why should that be important or a concern versus, potentially not working with a local lender?
I mean, it's right there in the word local. They know your market. They know what's going on in this market. I mean, I know I can talk to many of my amazing educated real estate agents, and they can tell me what the trends are in the market right now. Are we seeing a lot of multiple offers? Are we seeing a lack of inventory? If you're purchasing in this part of town versus another part of town, what are you looking like in difference of price range and taxes? And there's so much to know about your local market. I mean, I love New Yorkers, but I would not write a loan in New York, because it's completely different than we do here in South Carolina, and you have to be educated and licensed, but being educated and being licensed only takes you so far, unless you really know that local market or have local boots on the ground real estate agents and different partners, closing attorneys that could be partnered with you. And I think that's another huge thing. You want to have a great local team. When you're shopping for a home, when you're being taken around by a real estate agent, that person is local, and you're working with them because you know that they're an expert, and you feel confident that they have your best interest at heart, and they know what's going on in their markets. The same as a loan officer. That's a very important partnership, is that real estate and lender partnership, so that if they're in a multiple offer situation, they're calling Gabby on a Saturday at 2 p.m. saying, hey, can you call the seller's agent? Because chances are them, and just put in a good word. Those are things that if you have a great lender in your corner, they are available and able to do that for you. Because most of the time, a local lender, if they work a lot in that market, knows a lot of real estate agents. And so many times I can call and have a personal conversation with somebody and help give them surety that the buyer is, the pre-approval is worth what I'm saying it's worth. And, we're great candidates. And that's viewed so importantly in that seller and buyer's agent's eyes. So that's definitely a huge positive. I've won a lot of contracts for my clients just by being that voice of surety, and also having a great reputation. I work really hard to follow through on what I'm saying. So a lot of agents know if Gabby's saying we can do this, we can do it. And a lot of that is through having a great team behind me, like Atlantic Coast, where we've been able to accommodate rush closings. We've been able to accommodate, unique lending. And that helps when you have a great mortgage company, but at the same time, when you are able to say, oh, we can do this, and they know that you can do it, rather than being freaked out and scared all the way to the closing table. So right. I think those are some of the important things that I could think of. Local is almost always better when it comes to real estate and mortgage transactions.
Yeah. I mean, at the end of the day, you have home field advantage, right? all the ins
Oh
and
yeah.
outs. You know where the little divots are in the outfield, where where everything is basically. And you mentioned this, and I remember you telling me a story, as I think it was last week actually, where there was competing offers, and you literally just rang up the realtor, had a conversation with them, and they realized, like, one, they're going to get to work with you, which everybody loves. Two, the offer that you're submitting is real. You've already got everything locked in. You're ready to go. And the realtor knows that, okay, if Gabby's taking care of this, then I know everything is going to go smoothly. And if something does come up, because you do know the field of play, you'll be able to navigate it better than someone else. So you've actually been able to win deals as soon as you talk to somebody, like, oh, you're handling this? All good. Let's do it. Let's go this route.
Yeah, absolutely. And if something crazy happened a couple weeks ago where I actually did the original loan for the home that was being sold. And I think there was a little bit of confusion on, the home was originally an FHA loan and somebody was doing it conventional. And there was some worry on something to do with the outside of the home. And I was like, oh no, I did this loan like forever ago. We're like, I know this house. I know what's going on with it. Like, we were fine with it on financing. So we're fine here. I've done my research. I know what's going on. They were like, oh, thank God, and we're like, put their minds at ease, because, that's what you want, is that surety that a lender is not going to have an issue with something that you're thinking might be an issue. And so that definitely was a great experience. We just closed on that one last week.
That's awesome. Yeah, you definitely embody our tagline of simple, easy, stress-free. Doesn't mean that there's not going to be challenges, but that's the beauty of, like, what you're talking about, where if I have an issue that comes up as someone who's buying a home, and I come to you, I'm like, oh my gosh, this is happening. And you're able to say, hey, don't worry about it. I've been here 100 times before. I know how to navigate it.
Yes.
It immediately de-escalates that level of stress in that person, because you do have that home field advantage. You do have those relationships and connections, and you do know the market so well.
Absolutely. And a lot of buyers that I work with they're out of state currently, and they're moving and relocating to Charleston because it's in a beautiful, amazing, thriving city. And I love being able to live and work here. And I love working with out of state buyers, but they even know local is best. So they'll get in touch with their real estate agent. The real estate agent will say, call my girl Gabby, and we're doing a deal, because they'll have bankers and relationships from where they come from. But even those bankers will say, work with somebody local, because it's just so important.
Yep. No, that's such a great point that you made. So one of the things that, there's obviously someone buying a home that's already, pre-built, all that. But for individuals, let's switch gears a little bit. So for individuals who are looking to build their dream home, so they're going to be doing construction and all that, can you talk to us about what we should take into consideration between new construction preferred lenders versus outside lenders? And maybe part of that conversation, we can focus in on what we should know about in regards to credit incentives, and what we should be aware of as far as the difference between the preferred lenders and the outside lenders when it comes to new construction.
Right. Right. No. So great question again. When it comes to in-house lenders, we have a ton of new construction here in Charleston, in our market specifically, because we are thriving and growing so quickly that there isn't a lot of inventory. So I do experience a lot of buyers that are pre-approved with me and then decide that they want to buy something new construction. And then all of a sudden it's, your current relationship versus a new lender, and trying to, keep that relationship the best that you can. So one of the most important things when it comes to in-house lenders is knowing that there are great incentives that come along with new construction. The best thing that you can do is just compare apples to apples, the situation that you're being offered by that in-house lender versus an option that your current lender can give you. And the math, I love math, because you can't make math lie. You can see clear as day, the credits that you're being offered, and then the fees that are being associated with that. And sometimes interest rates are different. So again, it goes back to keeping that communication with your original lender as transparent as you can, comparing as best as you can. And I will always tell you, and I've told my clients this time after time, if the offer that you're being offered is genuinely the best offer for you and your family, then not only will you see it for yourself, but I'll also tell you, this is a great option, take it and go with it. And that's about 50-50. Sometimes, the option that's being offered, unfortunately, is coming with, some different things that you're not seeing up front. And so it's just important, again, compare as best as you can, apples to apples, and keep that communication with your lender so that they can help walk you through that process so that you can understand what's being presented to you. In-house lenders are great. They're great people. They're loan officers just like I am. And they are, definitely working with the builder. And so the process is normally a smooth one. So, and typically they're local as well. So again, it's just the numbers, making sure that those numbers match up and make sense for you and your family.
So in regards to those numbers, particularly when you're looking at the incentives, how should people, because sometimes, like you talked about, math doesn't lie, but also being able to fully, to see the full scope of what the numbers are, right? And understanding it. This goes back to, again, being able to work with someone who's experienced and is an expert in this area, right? Because you know what to look for. So if someone's going through that process from the credit incentive standpoint, what are the things that they should look for to be able to compare apples to apples, right? Because again, if you don't know what you don't know, you're not going to find it.
Right.
You're not going to be able to do.
We'll just go like this.
Exactly. You may see partial numbers, but maybe not the full scope of it. So from that standpoint, is there anything that people should make sure that they are being more vigilant or aware of as they're going through?
Absolutely. Check out your interest rate. A lot of the times the incentives that you're being offered are there, but there's a slightly higher interest rate from that in-house lender versus what an outside lender could provide you. And again, you might be saving in the short term in terms of the incentives, but there's a higher interest rate. It's costing you more money in the long term because you're paying more interest. So that is number one for sure, because there could be a large difference in what an outside lender is offering you to an inside lender. The second thing you want to look for is lender fees. So I've seen multiple loan estimates from different builders that have origination fee, underwriting fee, processing fee, discount point. I mean, there's like 4 or 5 different line items of additional fees that they're charging you. So it's taking away from that incentive. So if they're offering you $5,000, but their fees equal $3,000, and an outside lender maybe only has $800 worth of fees, that is definitely something you want to look at, because what you're being charged in fees is taking away from that incentive. So you're really walking away with much less than what they're promising you. So just to be aware of those fees, be aware of your interest rate, and more likely than not, depending on the situation, every buyer is different. Sometimes an outside lender can also assist with closing incentives. It just varies from client to client and situation to situation. So it's never something that I overpromise on, but if I am able to match some of those incentives, then we will do that, to assist in making sure that you're not missing out on any incentives that you could be gaining. So those are definitely important things to look at when you're doing those comparisons.
No, that makes total sense. And so we talked about a number of different things, the last one being with the new construction. And I think it would be a miss if we didn't at least talk about, kind of wrapping up our conversation with some of the things that are going on right now, particularly around COVID-19, coronavirus, and how that may be impacting, different markets, et cetera. So kind of going along those lines, what implications do furloughed borrowers face? Because obviously we're seeing right now, unemployment has been crazy through the roof with the pandemic.
Yes.
So let's talk a little bit about that. What implications do furloughed borrowers face?
Yeah, great question. So unfortunate, everything that's going on in our nation and in our world right now, with unemployment being, amongst the highest, or if not even the highest that it's ever been. So rightfully so, the mortgage industry is trying to react appropriately and trying to understand and the new normal, hopefully not our new normal for forever, but because this epidemic has been so unpredictable. Obviously, the mortgage industry and the mortgage investors have erred on the side of caution when it comes to furloughed borrowers. Every investor differs on what their verbiage is, but it kind of boils down to, if you've lost your job, and it's sad and unfortunate as it is, they do want you to return to work and kind of pick up on where you left off before the pandemic. So if you are a salaried borrower who was receiving a certain salary, we definitely want you to return to that salary and keep the same hours and position, and have 30 days worth of being back to that normal before we can really use that income again and it looks stable. Because unfortunately, with different cases coming up and all of these things, if you're receiving temporary income, let's say, for example, you were not you kept working, but you had a decreased income or decreased hours, that's seen as unstable. And again, because everything is so just unknown right now, it doesn't appear that would ever continue in the long term. So definitely returning back to your normalcy. If you are salaried borrower or hourly or tipped, there might be longer time periods that you need to be back at work, right, before that could be seen as stable again. And then self-employed borrowers are definitely trickier, because some businesses, unfortunately, are irrelevant now, or can't keep the same income. They were a small business and perhaps they were already struggling before the pandemic hit, and now have, completely decreased income. That is definitely seen as a huge concern. So we're reviewing a lot of profit and loss statements to see, what that income through the pandemic has continued to look like for you and your business. We've looked at a lot of restaurants that are self-employed. Some are continuing their same amount of sales, thank goodness. Some had shut down and couldn't afford that. So it just depends on, again, situation by situation. Everything is different. You have to completely evaluate based on everybody's individual situation. But for the most part, the main theme is stability, returning back to that employer, or if you're self-employed, having that income that would be normal in years past, have that continue and be increasing, hopefully. As we all like to see in business, right? We want to increase from year to year. Yeah. So it's definitely, all of that stability is what needs to be seen. And, I've been talking a lot to my borrowers that unfortunately have lost jobs, and I'm working a lot with co-borrowers right now. So I'm working a lot with, son wants to buy a house, dad is the co-borrower because he's stable and has a great income. And that's one way we've been able to problem solve so that parents can assist, or not even parents, spouses or brothers or sisters, or, something along those lines, to kind of assist with that stability so that they can still qualify. So that's been a huge loophole that I've been able to kind of work with through this whole pandemic.
Yeah, no, I think the couple of things you mentioned, where it's consistency, stability. Obviously, any kind of financial transaction where there's going to be an ongoing payment, those are kind of staples within that. I think it's really interesting what you talked about with the co-borrower. And it sounds like in most of those situations, it's where individuals know that if they are being furloughed right now, it's more of a temporary situation. So it's them it's them kind of providing a stopgap with the co-borrower aspect of it. Is there anything else that we should be aware of or around that? And obviously, here's the other thing too: is everything is shifting constantly, like
daily.
So maybe a better question for me to ask you is, what major changes have you seen or are you seeing to lending guidelines? Maybe 2 or 3, and also, everyone is listening now, taking this, with a grain of salt through the lens.
A grain of salt.
Yeah, with a grain of salt, at this specific point in time. But I think at the very least, it can kind of help us understand sort of where we've been, where we're at now, and maybe where we're kind of trending towards as we continue to move forward.
Right, absolutely. So I would say the main theme and the main trend that we're seeing from a lot of our investors or from the larger secondary markets is consistency, stability, and ability to repay. So those are your most important things. So one of the top changes that I've seen is, mortgage secondary markets and investors wanting reserves, so that forbid you lose your job, you do have some savings where you can repay that mortgage for a month, maybe 2 months. If that happens, because we can't control what happens after the loan closes, but we can at least try and have some surety in place that if something were to happen, you could continue to make your payments and therefore not lose your home, which is so important, especially when you just bought it or something along those lines. So ability to repay and being, again, erring on the side of caution. So reserves are a huge change. I would definitely say, again, with self-employed borrowers, all of the changes and guidelines, there's much more than what I'm discussing right now that have changed. And we want to make sure that you've been receiving the same sort of income and it will continue. So they are definitely more scrutinized right now. And again, self-employed borrowers in general are always evaluated, definitely more closely, because it's never guaranteed, because it's your own business, or you're working for, a self-employed company, or you are self-employed working for a company. So all of those changes. And try and think, there's been so many changes with guidelines. Definitely, I think the first stuff. Can you think of anything that you've heard of?
No, I think the most important thing is, because we can kind of talk about things that have happened and things that are happening now and kind of where we could, possibly see things going. But I think the most important thing that I'm taking away from this conversation is to really have that one-on-one conversation with somebody that you trust, that is an expert, that is preferably local in the market that you're trying to purchase a home in. Because, if it's somebody who is from out of state, there's probably going to be different guidelines for, say the New Yorker versus what it is in Charleston, and for a number of different reasons. Right. So to me, that's really that's the biggest thing that I'm hearing, is have those one-on-one conversations up front. Do your due diligence on who you're working. Mm-hmm. To me, that really kind of sums it up right there. Would you agree with that?
Absolutely. Yeah, that's the most important things that I try and get through with my clients all the time that I'm working with, is whether you are shopping, whether you know that you want to work with me, there's certain things that you need to expect, be educated, have trust with your lender, communicate with them, think of them as your number one quarterback and cheerleader through this whole process, because that's what we're there to do. And we're there to get you into a financial mortgage that's going to completely give you security for the next foreseeable future. We're not here to do anything that's going to cause risk or to cost you more in the long run. So trust, transparency, communication, all these modern things that were never heard of back in the day with lending. You just did the loan and moved on. We're just in a totally different world right now, completely different. And I love it. I love this industry. I love what I get to do every day. And it's totally, so much of me is reflected in how I do my job, which is, I love personal touch. I love being able to communicate with people. I'm a huge communicator. I'm a huge educator, and it shows in the way that I choose to do my job. So just
I couldn't
find somebody who likes that.
Yeah, I couldn't agree. I could not agree with you more. So as we wrap this up, Gabby, is there any lingering thoughts or, questions that I didn't ask, or things, if you could leave our audience with maybe one thought, what would that be?
There's so many, but I'll just go with, do your due diligence, do your research, and just trust whoever it is that you're wanting to go with in this process in buying a home. And at the end of it, walk away smiling in a home. And that's going to be our goal, is to lead you through that process, to lead you through it with surety and trust. And that's the Atlantic Coast motto. That's my motto. And that's kind of it.
Awesome. Gabby, thanks so much for taking the time to have this conversation today. Hope you have a great rest of the day. To everybody else, thanks for tuning in. We look forward to catching you in the next episode of ACM Insider. Take care, Gabby. We'll see you later.
Bye.
Hey, really quick before you go, if you enjoyed this content, be sure to follow us here on social, and don't forget to like and share this content. Thanks for tuning in, and we'll catch you in the next episode.